Hey, welcome back to The Dive. Today on the show, we're excited to have back the founder of TF Metals Report, Craig Hemke. Craig's joining us today to talk about Russia suspending its participation in the last nuclear arms treaty with the U.S., the Nord Stream pipeline debate, geopolitical tensions impacting the resource and commodities market, a Fed pivot, the Ohio train wreck and the lack of media coverage, lithium, copper, and gold. Hey, Craig, welcome back to The Dive. Thank you so much for joining us today.
Hey, it's always fun, Cassandra. Nice to see you.
Nice to see you too. Thank you so much for hopping on. Okay, so today's a big news day, so let's start off with Russia. Putin said that Russia is suspending its participation in the last nuclear arms treaty it has with the U.S. How big of a story do you think this is?
It's funny. Well, it's not funny, actually. This is something we've been following at my site since 2014. You can go all the way back to about this time of the year. I guess it was February, if I remember right, when you had what was called the Maidan Revolution in Ukraine, where the elected president, a guy by the name of Yanukovych, was forced out. Whether it was a natural kind of coup and uprising, whether the CIA had anything to do with it, it's all leave that all up in history to figure out. But it led us down this path to where we are today. This is the biggest threat, right? I mean, we can all sit around and talk about the Fed, and we can talk about, all the monetary policy and the dollar and all the stuff that we always worry about. But all of that pales in comparison, right? If things really get out of hand in the months ahead, we all can just hope and pray that, some relative stablemate maybe eventually takes over. But it's still pretty precarious geopolitical situation. And I don't know what else to say other than all you can do is keep praying that somehow we all live through it.
Now, Putin also renewed calls on Sweden to share its findings from the ongoing investigation into the explosions that damaged the Nord Stream gas pipelines. What are your thoughts on the Nord Stream debate? Is this something that's going to be impacting the market?
Well, it's like Epstein didn't kill himself, right? I mean, we all sit on Twitter, and as soon as they arrested that guy, that became a meme, a hashtag. Epstein didn't kill himself, and then you give it a couple months, and lo and behold, Epstein killed himself. As soon as that occurred, it was, to any plain thinking person, it was pretty obvious that some combination of U.S. or NATO did it. What was Putin going to do? Start bombing Moscow? That'd be the equivalent of that, right? Why would they blow up their own infrastructure? That doesn't make a lot of sense. And if, all these studies by Sweden and those other Baltic nations try to figure out what did happen, you can bet your bottom that if it did point to Russia, they'd have announced that by now, right? So then you got Seymour Hersh, the award-winning, Pulitzer Prize-winning journalist, coming out in his report, laying out a case, with sources that the U.S. did it. I think that was like Epstein didn't kill himself. That was the most logical explanation from the beginning. And since that's getting absolutely no run and no mention in the media, and again, the whole Nord Stream thing went down the memory hole until the Hersh report, that's probably he's pointing in the right direction. If true, if that's actually the case, it's a horrible act of international sabotage to have done that to the Germans in all of Western Europe. I doubt, like the Kennedy assassination and other events, I doubt we'll ever know the truth, just because it's not beneficial to those who perpetrated the act to let the truth get out.
As Russia's war in Ukraine approaches its first anniversary, what do you think geopolitical tensions do to resources and commodities in the global market?
Well, I guess I'd go in a bigger picture direction with that, Cassandra. In a lot of the interviews that I conducted so far this year, and at the end of last year, actually, people, we kind of do this recap of, what happened in 2022, the big events of 2022. And I've stated and will continue to state the biggest event of 2022 was in relation to the Ukraine war, but it wasn't actually the war itself. About the first weekend, maybe the second weekend after the war started, because I think it started on a Tuesday, the first weekend of March was when the U.S. and, NATO/ECB, whatever you want to call it, announced that they were doing two things. One, they were excluding Russia from the SWIFT international payment system, but then also freezing, in a sense confiscating, all of Russia's non-domestically held foreign currency reserves, which is about $400 billion. So that kind of taught Russia and really any other country that potentially could take an adversarial stance to the U.S. a pretty important lesson. It's like, hey, you get sideways with these people that run the system, they'll just kick you out of it. And so since there's a pretty good likelihood that over the years and decades to come, we might get sideways with them too, as we look out for what we perceive to be our own best interests, if that's China or India or Russia or whomever, we better come up with an alternative system so that if we make those people in North America mad, they can't just shut down our economy. And so that's what's being put in place. In fact, it's been being put in place since 2009. It's just that whole wheel got sped up that first weekend of March because the U.S. laid the cards on the table and said, look, here's what happens. You piss us off, we're going to freeze you, we're going to steal your money, and we're going to kick you out of our system. And so the time since now, the last 12 months, have been spent gradually building an alternative. It's loosely described as, the BRICS, Brazil, Russia, India, China, South Africa, whatever you want to name those countries, working together. They call it de-dollarization. All of that makes it sound like it's happening quickly. It's not happening that quickly, but no doubt it's happening. And so in the longer term, that's the biggest impact for all of us in the precious metals and the miners. Because if you can what that basically does, if that reduces the demand for dollars long term, while at the same time the supply of dollars continues to increase as the debt continues to explode, well, then that's just Econ 101, the value of said dollars of any object where the demand is decreasing but the supply of it is increasing, the value drops. And as the value of the dollar drops, that's obviously beneficial for all commodities and the precious metals included.
Shifting gears, according to the Bank of America, they're expecting the Fed to continue with rate hikes until its June meeting and predict that cutting rates will begin early 2024. Where do you think that we are in the inflation battle, and what do you think needs to happen for the Fed to pivot?
Well, this is kind of the basis of my whole forecast for this year, which I write a forecast every first week of every January, in that this year is most analogous to 2010 and 2019, which were past years since, everything changed with QE in 2009. So the paradigm changed. The similar years now are 2010 and 2019, which were past years when the Fed was shifting. They'd been either shutting off QE or hiking rates to the point where the economy started to falter. And then they had to make a decision. Do we continue to play this rhetorical game, or do we step in and save the economy by cutting rates and restarting QE? In both 2010 and 2019, that's exactly what they did. And that's exactly what they'll do this year, is what Bank of America is saying. That's what I've been saying. It's important for gold and silver investors to know is that in the first half of 2010 and in the first half of 2019, the precious metals went sideways. Just kind of, up and down. You got shaken out a few times. Oh, I guess the Fed's never going to do this. Malarkey. The Fed did do it, and they're going to do it again. And that's when things take off. And in the back half of 2010, silver went from 18 to 30. Okay, in the back half of, or really over just 3 or 4 months in 2019, gold went from 1,200 to 1,600. Okay, so you get these huge rallies, and then they really get got going in 11 and in 2020. So it's important to know that that is the direction the Fed's going to go. It's just a matter of when. How much more will they keep hiking? Gold has fallen a little bit here in February, a little bit, I should say, $100 here in February, because all of a sudden the economic data has gotten a little bit better. And people are thinking, man, it might be another couple of months before the Fed starts, does this pivot and starts cutting. It doesn't matter when they do it. They're going to do it. And so, I don't know, when will they actually start cutting? Historically, if you look back at the last, I think it's 8 or 9 rate hike cycles, the average amount of time between the last hike and the first cut is about 75 days. That's it. So let's say they hike again at the next meeting here next month, and then maybe, who knows, maybe they throw another one on the fire. in May or something. Well, that would imply that by September you get your first cut, if historically speaking, and by December you get another. And you know what? What's funny? Because that's exactly what the Fed fund futures market is predicting. Is 2 rate cuts before the end of the year. So again, I don't want to make it sound like, it's overly simple and you could just, because this is not 2019, it's not 2010, the geopolitics we just discussed. There's all these other things going on. But anybody that thinks that the Fed is just going to keep hiking and keep rates there while the economy goes down the toilet, there's no historical precedent for that. And I don't think they'll do that now either.
In other recent news, we have to ask you about the train wreck in Ohio. It seems like the media hasn't put much attention on it. How closely are you following this story?
Oh, I don't know. I mean, it's a local tragedy. I really caution people. I mean, I'm on the internet every day and have been for 12 years. And so I've seen a lot of really smart people get duped by a photoshopped image or some, slick video that shows up on YouTube. And so I don't know if I've gotten cynical or realistic or whatever it is, but I just, this whole American Chernobyl thing is just out. I mean, come on, or I saw something the other day. Somebody was, where the hell were they? Toronto? And saying that they were, could see the oil on the ground and could smell the chlorine in the air. And I'm like, come on. It's a local tragedy. And again, the U.S. is a huge country, and we move vast amounts of merchandise and chemicals and nuclear, everything by truck and by rail. That's the only cost-efficient way of doing it. The infrastructure is not in the best shape when we're spending trillions of dollars on wars instead of rebuilding bridges and the like. And so there are train derailments every day. Most of those trains are carrying grain and general merchandise, but every once in a while you get one that's hauling some, noxious chemical like vinyl chloride. And it's not that it's bad luck, but it's kind of just bad luck that it happened where it did. So I don't know. I'm not concerned I don't know. I think it's hyperbolic to think that there's some team of Russian saboteurs going around the country, pulling spikes out of railroad ties and deliberately derailing trains that have some specific chemical on it. I don't know. Derailments happen all the time. Anyway, I'm sorry. I don't mean to go waxing on and on about that, but your question was, am I concerned about it? I just think it's just part of what happens in day-to-day life in America.
Okay, so let's move on and talk about lithium. The Mexican president signed a decree handing over responsibility to the energy minister after nationalizing lithium reserves in April. What are your thoughts on countries nationalizing lithium?
Off the top, I own some lithium stocks. I know that like Argentina and Chile provide about 50% of the world's lithium. That's where it mainly is. There's some up in Canada, and other resource-rich places. I'm not sure how much comes out of Mexico. Maybe even more so than the precious metals and nationalization of mines. I think probably some of those rare earth, if you want to call it that, or even battery metals, probably are subject to that type of thing, just because this, green battery push stuff that. But other than that, I don't know much about Mexico and lithium, other than just the fact, that it's kind of a fool's errand in some regards to think that we're all going to be driving around with electric vehicles when the amount of energy it takes to get all that metal out of the ground and the amount of other earth that has to be moved just to come up with 1 ton of lithium and, copper and nickel and cobalt and all the rest that go into that stuff. Not then withstanding, you got to fuel the power plants that provide the electricity in the first place that stream out of your outlet into your Tesla. I'm not sure the math of all that at present. I'm not sure that we can actually move to some kind of electric vehicle future without a significant upgrade in how that energy is stored in the vehicle. But regarding Mexico and lithium, I would imagine there's some risk that other countries will do the same, but I'm not sure if that extends to the precious metals just yet.
China's CATL, the world's largest battery maker, has offered discounts to top clients for the next 3 years. Some say that this reflects a downturn in the price of lithium. Could this move spark a price war and benefit China EV makers?
Hard to say. Um, I'm not sure how much. I'm sure. Well, let's put it this way: China is obviously driving that demand, right? And they have their own auto manufacturers, and they're stepping in where, like, the U.S. has stopped doing car business with Russia. China has stepped in and filled the void, that sort of thing. And they see the direction. I mean, they stopped selling the rare earths a couple of years ago too. So you can certainly see that. I'm not sure though that it reflects some kind of top in the lithium price, um, because it's a hard thing to extract. I don't know if I only learned this last year that most of that lithium that they mine, if you want to call it that, out of Argentina and Chile is in the water. They pump water out of it. It's not like, you can bore a hole in to see how much is, and instead of extracting a core of rock like you do when you're drilling and sampling for gold and silver, you bore a hole and you pull out water and you see how much lithium is suspended in the water. So then you pump it all out of the ground and you put it in these massive, what are they? I forget the pits, basically, of water, and you let the sun work on it. So then the water evaporates, and what's left is the lithium precipitates out into the bottom, and that's how you get the lithium out of the ground. We talk about a labor-intensive process. This is not simple. So I just think that the supply-demand dynamics are probably, regardless of the short-term stuff, remain pretty strong for lithium because this is not the easiest thing in the world to get your hands on. And so anyway, to answer your question, which I think, if I remember 5 minutes ago, had something to do with lithium prices, I think the short-term ups and downs are always going to happen, but I would imagine the long-term trend is still higher.
Okay, now we read in one of your Seeking Alpha articles that you're keeping copper in focus. Over the past 4 weeks, copper prices have risen and fallen backwards, much like gold and silver. What do you think will be the key driver of copper prices moving forward?
Well, the only thing I have to correct you on is I'm not on Seeking Alpha, but I do write an article every week for Sprott Money out of Canada, and they put it on their website and they distribute it. So that's probably where you saw it, on the Sprott Money.
Oh, sorry, featured in Seeking Alpha.
Hey, I was just, before we started speaking here on Tuesday, I was just posting a chart of copper on my site. Copper's up another 3% today, back up to 422. Unlike gold or silver, which during this month have broken down through their 50-day moving averages and continue to move lower, copper came down and bounced from its 50-day moving average and is moving higher again, getting close back to the highs that it had back in the last week of January. That's beneficial, particularly for silver, because of the long-term correlation between copper and silver prices, long-term correlation between their industrial use. But also it's very fascinating to watch copper because global copper stockpiles are falling and being depleted. And there were some really interesting headlines last month. For example, the big global commodity trading firm Trafigura, I think is how you pronounce it. I never pronounce it. Anyway, they announced they were withdrawing vast majority of their copper from the London Metals Exchange, LME, because they were concerned about making future deliveries in the months ahead, where they have sold forward, and hedged for other clients and stuff, and they wanted to make sure they get their hands on it. That's how short of supply this is. And there are charts all over the internet show LME, not just copper, but all the other base metals, the supplies, the above ground stockpiles, not only in London, but globally, falling sharply for the last 4 and 5 years. So what happens if, copper is now back in its range between 4 and 480, just like gold and silver are in their ranges since 2020. Well, what if copper breaks out? What if copper goes above 480 and starts moving towards 6? Well, it's hard to imagine a situation where, if that's the case, that silver is still going to be 21. So that's why everybody should keep an eye on copper.
One more thing before we let you go here. We know you don't have a crystal ball, but what is your gold price outlook this year?
Well, like I said, the only thing we can go off of that we know for certain, I feel for certain, is that the Fed's going to change policy. These Fed goons, they're all academics. Most of them never had a job in the outside world. Powell, at least, was a lawyer. before he became to the Fed, most of the regional Fed goons, Cash Carey and Bullard and the like, they worked at the Fed for 35, 37, whatever year, and they've never done it. They're just these academics. And they've got their little models that they follow. Based on, the previous 5 times and this and that and the economic macro this and blah, 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 they can decide, that the U.S. economy is going to grow at X percent over the next, 2 years, and employment rates can do that and this sort of thing. They have no model for what they've done in the last 12 months. They've never, ever raised interest rates to this extent, this quickly. So they, you could see, they're flying by the seats of their pants, if you want to call it that. So they don't know what's going to happen. I mean, there's these anecdotal things going on, the collapsing of the manufacturing sector and, and all these other things. Consumer debt is rising, try to, keep the plate spinning and all this kind of stuff. All these mass layoffs, but yet the manipulated, statistical garbage of the jobs report says we're adding all these part-time jobs, and so everything's robust. I think eventually there's going to be quite the negative economic shock. And the Fed, as we discussed earlier in this call, Cassandra, is going to react by cutting rates, especially going into a U.S. election year next year. If that's the case, what will happen? Well, gold and silver are going to stay range-bound through the first half of this year. They're going to run up and fall back and run up and fall back the way they always do. But then, once the Fed starts cutting again, and even maybe restarts QE or starts talking about it, then the speculative money starts coming into gold again. COMEX Gold has the lowest contract open interest in like 9 years. Okay, nobody owns it. Everybody hates it. Okay, what happens if there's 200,000 contracts of speculator long interest that comes in? Okay, so gold starts going up again when, and the miners start going up again as interest rises. Once it breaks out above 2,000, the news and CNBC, gold's above 2,000, and silver breaks out above 28. Then you usually get at least a 10% push. Once you get above make a new all-time, you get at least a new 10% push above that. So it happened in 2020. So I think it's very easy, if I'm right about all this, that say the next target for gold is at least $2,300. I thought it'd get there before the end of the year, but I didn't think, the economy would show this kind of strength in January and into February. So maybe it's more like first quarter of next year. I think silver probably goes to 35, 38, but then that's not it. As I said, 2010 was followed by 2011. 2019 was followed by 2020. Okay, and this year will be followed by 2024. So to begin with, let's just expect more of what we've seen so far this year, maybe into June, kind of still in the same sideways range. But then once we get rolling later in the year, that's when the fun starts. And the most important thing for gold and silver investors is not get wrong-footed and not get talked out of your position, not go thinking that this time is different and the Fed is going to take rates to 8%, and that kind of thing. They're not. Just hang in there. And the world's going to look quite a bit different, at least for gold prices, by later this year.
Okay, well, that's all we have for you today, Craig. Thank you so much for coming on. You've given us a lot to think about, and we appreciate your time.
Always fun, Cassandra. Nice to see you.
Thank you all so much for tuning in today. We will be back again tomorrow with another great interview covering some small cap news. So be sure to stay tuned by hitting that notification bell and subscribing below before you leave if you like that kind of thing. Bye.